Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURCAD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance, which was acting as resistance here and again resistance here, which now that the market has broken it to the upside is turned support here. Now, as the market is testing previous resistance turned support, we could expect the market to test it and then to reject the level to the upside. Zooming in, we can also notice how from a pattern perspective, we had the creation of an impulse followed by a correction. In general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 50% and 0.618 Fibonacci retracements lining up perfectly with this previous resistance turn support, creating confluence of support at this level that we could expect the market to potentially reject to the upside. Going down on the weekly time frame, what do we see? Well, here on the weekly, we can see how we have a market which at the moment is testing a quite strong level of historical structure from a weekly perspective on this market. This area was acting as previous resistance, again here, turned support here, 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 and now that the market is approaching once again the level, we could expect the market to react to the zone as support. So we could expect a potential bullish rejection away from the area. Going down on the daily time frame, what do we see? Now, from a daily perspective, things get quite interesting. In fact, what we can notice is that in creating this move to the downside, the market is also creating an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, or at least for the market to retrace to the 0.32 of the Fibonacci taken on the daily impulse, which is the first upside target, which at the moment is lining up exactly at this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so what institutions are doing, if we look at the data for the euro, we can see how the last report's net positions have continued to getting increased. We went from 143k net positions all the way up to 173k net positions, showing a huge increase of the net positioning, with institutions adding longs and closing shorts. In fact, with the last report alone, we can see 3.3k longs getting added and 700 shorts getting closed. Now, if we check the data for the CAD, we can see how the CAD is getting weaker, going from a minus 11k net positioning to a minus 50k net positioning at the moment. And a weak CAD and a strong euro is exactly what we need for a potential rejection to the upside and for the market to reach at least the 0.32 of the Fibonacci taken on the daily impulse. So how we could be approaching this potential rejection higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries. At that point, we could be looking for a potential move higher for the completion of the M pattern, at least at the 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to one payment of 97 euros. And also, as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the program directly from your student dashboard, and you move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, this is the button to join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description of this video, and I will see you in my next video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.